Welcome to the Specialist Trading Weekly Stock Review for the week ending November 19th, 2010. We're going to go through each and every stock that we posted this week, and we had another profitable week with all the trades and signals that we generated. But before we do, we ask that you please take a moment to view our disclaimer. I'm going to show you all the performance from the trades that we posted this week, but remember, we can in no way guarantee that any of the results we're about to show you will be repeated in the future. So please take a moment to view our disclaimer, and then we shall begin this week's review. Now, before we begin, I also want to mention that even though we post the nightly signals each and every night, they are mainly meant as a learning tool because we give you in Specialist Trading on our website, we give you within all of the video learning section and all the videos, all of the rules to our strategies. So you should know from learning our techniques and concepts where to enter, where to place your stops, and where to actually exit on each and every trade. The reason we post all of this information nightly is more for a learning tool. You're more than welcome to actually mirror our trades if you'd like to. But remember, our goal at Specialist Trading is to teach you how to trade with the specialist edge. Therefore, we're trying to teach you all of the techniques and concepts that I was taught on the floor of the exchange. So remember, you can take that with a grain of salt, but you are more than welcome to take the trades, but we would more likely have you learn how to trade these strategies before actually just blindly taking the trades without knowing why we entered at a certain point and why we exited and placed our stop. Okay, with that said, let's start off with the stock positions that were initiated this week. Our first trade was in the letter L using strategy number 4. Now, this strategy is designed to capture quick momentum moves. Now, we went long on Monday the 15th at 39.31. We got stopped out the same day at the same price, so we basically broke even on this trade. We'll show you why. Okay, firstly, we are above the buy-sell line, the 50-period simple moving average, so we're only looking for buy opportunities. And this is our setup bar, circled in blue. Once again, if you know the rules to the strategy, you know that the first thing you must look for is a setup bar. And there are certain requirements and rules that must be met in order for a bar to be a setup bar. Now, this is the setup bar for this actual trade. So this means that we can enter the trade once we trade one tick above this setup bar. And we did the next day, so we entered at 39.31. Here's our first stop placement at stop placement number 1. And here's our second stop placement. Okay. Now, here's our exit level, which is roughly about the 39.65 level. As you can see, once we entered, things were going our way. We were looking like we were maybe actually exiting the very same day. But this is the discretionary move, which we teach you on our website, that if we get to a certain point, somewhere between 70 and 75%, I know some of my students like to use 75%, but if you get to the 70% level, in other words, from where you entered to the designated exit point, if you traverse at least 70% of that distance, we would suggest, now this is not a rule, but we would suggest moving your stop to unchanged. So as you can see, we got up past the 70% level. It looked as if we were going to be exiting, but once we got to this level, what we did was we moved our stop from stop placement number 1 to unchanged at 39.31. And look what happened. We automatically shifted gears, and we got stopped out that day. And it was a good decision on our part, because look what happened the next day. We gapped down lower, and had we left our stop at stop placement number 1, we would have gotten stopped out for a nice loss. And had we placed our stop at stop placement number 2, we would have gotten stopped out down there as well. So this is, once again, this is not a rule written in stone. It's up to you, from what you feel about what the market conditions are or how safe you feel about being in the trade. But we just decided to move our stop up to unchanged, and it was a good decision. Sometimes it doesn't work out. Sometimes we get stopped out, and then the trade turns around, and it would have been a profitable one. But this one we broke even on. The same thing happened on our next trade in VZ. Same exact example on the 15th. Using strategy number 4, we went long at 32.64, and we broke even on the trade. The same example here. We were above the buy-sell line. We found our setup bar right here circled in blue, so we went long once we traded above it. Here's our designated exit level, and this is all predetermined before we even enter the trade. These are all, once again, taught to you on the website, the rules of where to exit, where to enter, and your 2 different stop placements should you decide to either use stop placement number 1 or stop placement number 2. So we entered the trade at 32.64. Once again, we got past that 70% level, so we moved our stop up to unchanged. This was just our choice. Now, we were still in the trade at the end of the day. The next day, we gapped lower and we got stopped out unchanged, but look what happened. Had we left our stop at stop placement number 1, which is where it was in the first place, we would have broken, or I should say we would have got stopped out at a loss. Now, had we used stop placement number 2, we'd actually still be in the trade because the stock is somewhere back up around these levels. You'd still have a loss on paper, but you'd still be in the trade. So these are things that we ask you to learn on our website. They come with experience and with learning the strategies of which stop placement you decide to use, if you want to use the discretion to move your stop placement up, and which exit level you want to use as well. Our next trade was in CAM. This was a combination of two strategies, strategy number 1 and strategy number 4. Let's look at this through the eyes of strategy number 1. Now, we said strategy number 4 is designed for quick momentum moves. Strategy number 1 is more of a swing play. You're in it a little bit longer, or if you're not in it longer, you have a larger chance to make larger gains. So we went long on the 17th and we exited the next day. But on this trade, we made over 3 points. So let's show you how this turned out. Now with strategy number 1, we use a proprietary Donjon channel setup. Now these are not your normal Donjon channels. We have them pre-configured to a particular setting. Once again, we tell you what that setting is on our website. But what we want to see is we're above the buy-sell line once again. We want to see all the Donjon channels headed in the same upward direction. So this tells us we have some type of short-term uptrend in place. And then we simply look for the setup bar, the bar which meets all the rules telling us we can go long. And that's this bar right here. So we entered once we traded 1 tick above the setup bar at 44.03, and we place our stop just below the low here of this sell-off. That's the stop rule for stop placement, or I should say strategy number 1. And then we simply wait. We entered at 44.03, we placed our stop roughly around 42.50, and then we wait. We're either going to get stopped out or we wait for price to rise and touch the top Donjon channel. Once it touches that channel, we're out. And so we had an open order in there to sell at 47.17. We exited for a 3 and 14 cent point gain in just 2 days. That's how simple it is. Our next trade was in STJ, using strategy number 4, the quick momentum move. We went long on the 17th at 38.61. Exited the next day, 38.93 for a 32-cent gain. And also, remember, as you saw in strategy number 1, we made over 3 points. Strategy number 4, because it's designed for quick moves, you're only looking for 25 cents to maybe $1 at most on those trades. So you have to decide prior to the trade which style of strategy you're going to be using. Excuse me. All right, so here's our setup bar, circled in blue, as you can see. It meets all the qualifications to go long if we trade 1 tick above. So the next bar we did, so we entered at 38.61. Here's the 2 options for your stop placement. And this is all easily calculated once you know the rules of how to calculate the stop placement. As well, here's the calculation for the exit. And this is all easily calculated once you know the rules for the static exit. The exit on strategy number 4 is static, meaning that you know prior to entry where you're going to be exiting, so you can simply place an open order. And we had an open order at 38.93, sold it the next day, and we made a quick 32 cents. Our next trade was in CCE. Now this was a short trade using strategy number 4. This particular series we went short and we actually had a loss on this trade, lost 69 cents. As you can see, we are below the buy-sell line, so this means we're only looking for setup bars that tell us we can go short. And this bar meets all of the rules, all of the qualifications, so we can go short if we trade 1 tick below. As you see, we went short here at 24.51. We're using stop placement number 1. If you know the calculations, here's where stop placement number 2 would be. And we're not even going to tell you where you would have exited, because as you can see, the minute we got short, the very next day, we got stopped out at 25.10. Now this, if you were using stop placement number 2, once again, you're still in the trade. We have not been stopped out if you're using stop placement number 2. So these are the things once again, you need to go to the video learning section, watch our videos, and you can decide which stop placement is right for you, as well as which strategy. But this trade happened to be a loss using stop placement number 1. We got stopped out at 25.10 for a 69-cent loss. Our next trade was also a loss, BBBY. Now this was a combination of 3 strategies. You'll see this from time to time. Strategy number 1, strategy number 3, and strategy number 4. They were all giving us long signals. And we went long on the 18th at 43.71. Unfortunately, we got stopped out the next day at 43.03, so